Hi everyone, Evelina from Arcadier here. Today on Inspire, we have Soon Liang Tan. Soon Liang has extensive experience in investment, corporate finance, entrepreneurial finance, and strategy consulting. He's worked for JP Morgan, DBS Bank, and BDO. He's currently the founder and managing director of Ti Ventures and Omnibridge Capital, both which focus on private equity investment and early-stage, fast-growing, and innovative businesses. He's a CFA charter holder and received his MBA from the University of Hull and received his Bachelor of Business from Nanyang Technological University. He's currently an independent director for 3 Singapore Exchange-listed companies, Wangfeng Industries, ISDN Holdings, and Clearbridge Health. Hi, Simon. Great
Hello.
to have you.
Hi. Thanks for having me here.
So today we're going to be talking about the basics of funding. So maybe you can tell us a little bit about yourself and why you're talking about the basics of funding.
Okay. Hello, everybody. I'm Soon Liang, Singaporean, basically born and bred and studied in a local school and graduated with a bachelor degree. And I went on to work for a bank in JP Morgan, focusing on risk management. And then subsequently went on to pursue my MBA and CFA charter holder together while working at the same time. And then later part of my career, I actually joined investment banking in DBS Bank to focus on IPOs, and that's when I really get my interest in looking at entrepreneurs and understand how do they actually raise funds from the capital markets. And then I did a stint of entrepreneurship work in China, where I actually invested and actually operate an education business in Shanghai for 2 years before I returned to Singapore and joined a private equity firm to focus on investment. Along the way, I have met with a lot of entrepreneurs and also been having an experience to operate a business in a startup before. I'm actually quite curious on how can a business actually raise fund and scale. That's when I decided to basically do more of this and join a accounting firm called BDO. And after which I did a lot of IPO projects and M&A projects, which later part leads me to setting my own firm, Ti Ventures, to help even more entrepreneurs to basically realize their dream of getting the company listed and also having a trade sale for the business. Towards later part of my career, about 3 years ago, I decided to set up Omnibridge Capital to focus on investing in a startup company. And so far, we have invested close to about 12 companies. We have also invested in the venture capital fund based in LA, called Ti Ventures, where they focus on angel and seed investment in technology-related companies. Yeah, that's pretty much where I am at the moment now, busy looking at good investment companies and at the same time helping small, medium-sized companies in Singapore to basically navigate through the whole series of capital raising, the whole series of getting ready for a transformation in a business. As you know, Singapore is facing a situation where the cost is actually very high and there's a human shortage in the market at the moment. So a lot of the traditional small, medium-sized enterprise who have once actually done very well have now decided to reinvent themselves, to transform and even to grow out of Singapore. And that's where we come in with our expertise and also our network to help them achieve their goals.
Awesome, very cool. Definitely think that a lot of companies around the world are trying to reinvent themselves to make them relevant to consumers and users today. Yeah. So you mentioned seed and angel investors, and I know that a lot of times funding and just capital raising in general can be quite a daunting task for most entrepreneurs. Yeah. So I wanted to get your, thoughts and maybe insights for our viewers on maybe just the basics of funding. We hear angel investors and seed rounds, and there's all the different, A to B to C and then more. Maybe you can help explain what each round of funding actually means, what is to be expected from each one, whether it's from the entrepreneur or from the people or companies that are investing.
Okay. Yeah, I think basically I focus a lot more on investing in Singapore companies and Singapore entrepreneurs. So in a Singapore context, what I can generalize is that these days, very much different from previously in 20 years ago when I first stepped into the workforce, I remember that there was a time when I have a good idea to actually launch my business in Shanghai. I spoke to one of a client who actually got his company listed. I was a project manager to handle the IPO project. He asked me for a business plan, and I said, look, I need to spend some time to actually look at research and then determine the price point and then how my market entry modes. Now, then he decided to take out a checkbook, right, and say, he said, don't worry, you just give me a 4-pager, 5-pager of what you're going to do with the money and roughly what are you going to do. And here's the 50,000 checks for you. So that was really my first encounter with angel investing. He was the first one who actually said that he's going to invest in whatever idea I have. At that point in time, I thought it's an idea that I always have been hatching my mind to do education business, to bring financial education to the masses in China. At that point, it's 2001 when China just joined WTO in year 2000, right? And then I have a CFA charter, and I have actually focused so much my earlier part of my career in the investment bank and also my MBA program. So I thought, well, I could teach, and therefore it'd be great to go to a big market and then launch the CFA training course, and I'll have a lot of students. So it's a very naive kind of situation. It's just an idea. But at that point in time, something just stopped me from taking the 50,000, because I asked myself a question: what if I lost my money? How am I going to repay this 50,000, right? And eventually I went back to the entrepreneurs, thanked him for what he has done for me, and I said, no, I don't think I should take the money at the moment now. I have some savings, and I was freshly retrenched from the bank where I work in. I said, with the retrenchment package, with my saving, I could take this money and launch my business in Shanghai first, and let's see how it goes. If I'm successful, I may come to you for advice and further fundraising. Years passed, I didn't take a single cent of venture capital money. So when I was growing my business using bootstrap, using my own saving in China, in fact, there are times when in the evening when I walk back home from office, I regretted taking the money because it's so hard to actually run the business without the money. But I guess that 2 years of operating using very little and focusing on how to actually create cash flows, how to run a business, actually taught me a very important lesson in life. And that lesson is always to depend on yourself, and then try to actually force yourself to think of a business model that is sustainable. So imagine if I take his money, I am sure with my inexperience, I would have probably burned all the money. Yeah. And fast forward 20 years later, when I started my investing journey with some of the entrepreneurs, I've seen many entrepreneurs coming to me asking me for funding, and some of them have given me very comprehensive business plan. But when I ask a simple question on have you ever done the business before? How do you handle failure? Have you failed before? Many of them look at me in amazement. They say that I've never been a failure because I so smooth in life, right? I graduated from school, and then I never have experienced any business venture and never failed before. So then I told them, I said, then why are you coming to me asking me for a first 100,000 or 300,000 early investment? And that's where really the angel investment funding portion comes in, right? But typically, angel investment fundraising amount is usually between 50,000 to anything to 150,000 for concept stage. So the idea is that the entrepreneur has, he has an idea, and then after he has actually assembled his team, then he start looking for his seed funding, which typically takes from $500,000 all the way to $2 million seed funding. And that seed funding is actually used to actually hire more staff and to develop a minimum viable product before you go on to Series A funding. A Series A funding is typically when you already have a product, you have a product market fit, and there is a customer that have already been using your product and they actually pays you for that. So you know that your model is actually sustainable because there are real customer paying you your real first dollar, right? Then you think about how do you scale up by increasing the marketing channel, by increasing the number of experienced staff, and also to develop other new products to whatever you're doing, right? Then you go on to raise your Series B to actually further scale your business. Subsequently, into Series C, when you want to start bulking up your balance sheet to do some acquisition, to do some investments. and then before you go for the the Series D, and eventually some have actually skip the Series D altogether and go to what we call mezzanine and pre-IPO funding before you actually listed a company on the stock exchange in anywhere in the world. Yeah.
And I know that some people are actually pretty hesitant to take money from their friends and family. Yeah. What's your take or your advice on this? Is it always a good idea, or is it sometimes a bad idea?
Okay, there are some projects which we have invested. Some of the companies, the owner believed so much in the business, and they actually told their family and friends about it, and they raised capital from their friends and family first before they actually approach the professional or the high net worth individual. And usually in the early stage, in the angel round and the seed round, usually you have the professionals or you have the high net worth individual who comes in to put the money to pass the hat around. There are also the other camp of entrepreneurs who would not take any of their families and friends' money. And if you already ask them why don't they do that, right? It's simply because they are just not confident that their business will take off. And if their business don't take off and it takes money from their friends and family, it's harder to face them during the Chinese New Year or Christmas celebration, right? Yeah. But to me, before I raised capital, back then, 3 years ago, when I invest, I don't really focus on whether you have raised money from friends and family. But today, after investing for a while and seeing so many entrepreneurs, in fact, I'm more inclined to invest in company which the entrepreneur have already raised capital from their friends and family.
Oh, interesting.
Yes, yeah. And I find that that is important because it sort of illustrates to me, right, the confidence that the entrepreneur has on himself. And by raising capital, it's not so much of a burden, but I would like the entrepreneur to think in this manner. Now, for example, usually when you raise angel round, your valuation tends to be quite low, right?
Yep.
And then angel round, you're supposed to put in the money, and they would basically decide to whether to participate in the future round, or they just hold the investment stake till the point in time when there's liquidity event, be it a merger, IPO, or M&A. And I think that for a person who is going to start a business, if he believes in his business model and he really find a passion to do this business, then by getting his friends and family involved, he is also in the process enriching his family through equity in the company. Yeah, so I think that's not a bad idea to actually have your friends and family whom you care about. And to me, that's also another red flag, right? If you don't get your family to put in money, then I think that why should I commit so much of my money when you don't really believe in the business? Fair enough. Some of the founders would say that, well, my family are not wealthy and therefore they couldn't commit. But from my experience in some of these angel investment company, I've seen entrepreneurs who come to me with fundraising, and I invested 50,000 of my money. Or sometimes I told them that I don't really believe in your business model, but I think you have a passion for it, and I think you really want to work hard for it. Okay, to support you, I will just invest 20,000, for example, right? And I think that is precious, because even though it's 20,000 or 50,000, but it actually spark off a confidence in the entrepreneur to then go to do more fundraising from other people. Yeah, in fact, there are some projects which Omnibridge investment have actually led, and we got our friends and family to actually participate as well, just because we are putting our own principal money into the projects. And then we tell everybody that, look, we all want the project to succeed. Yeah. And if it's a small company, fledgling company, then all the more we need more help from friends who have different diverse professional skills, network, contacts, to then help this young company to succeed. Yeah.
It is very interesting that you say that you are more inclined to invest in companies that do reach out to their friends and family, because it does create kind of a accountability that is very close to home. They're always going to get people asking, like, how's the business going? How's my money?
Yeah,
like that.
I mean, of course, it adds a little bit of a social pressure and nudge, but take it in a good way, because when people ask you about how good the business is, people can accept, things go wrong. All businesses, go through success and failure. the entrepreneur journey is not smooth sailing.
Yeah.
Of course, we all go through hardship and hard knocks, but never get beaten out, right? I mean, you never always persevere and always continue the journey, no matter how hard it is. Yeah.
Very nice. So what are some common mistakes that entrepreneurs make when they are trying to seek funding, whether it's at the angel round or, you know, Series A, Series B?
There's a story which I always like to tell people, right? I've encountered entrepreneurs who come to me for capital raising, and when I ask them, why do you need to raise capital? And then he would tell me, right, that, well, I don't have a lot of money, and I need a job, and that's the reason why I need to raise fund to pay a salary for myself, and then I could contribute based on what I have done in the past. I think I can bring a lot of value to the company, and therefore you'll be lucky if you invest in me, and then the company becomes successful, and then you get rewarded. So I've seen entrepreneurs who tells me this. On the other extreme end, I've seen entrepreneurs who are extremely grateful and full of gratitude, and then even if I reject their proposal and I don't invest in the company, they actually thank me for my time and thank me for my advice and continuously update me even though I have not invested in the first round. They continuously WhatsApp me, email me, catch up over lunch and dinner, and without any expectation of further investment. It's just that they want to update me what's happened in the past since they raised the funding round, and then generally just to update me and stay as friends. So entrepreneurs like this, I mean, these are people that I appreciate the friendship, and you never know, right? Because when you look for a venture capital or investor for fund, and if the person don't invest, it could be because you are at a different stage of your business life, or you have a investor have a different expectation of return from what you have and different ideas and roadmap. But never say never, right? The investor may come in later part in investment in a Series B or even pre-IPO investment, or even be a director in a company where a company go public listing. So it's important to keep the relationship there. It's not just about money. It's a lot about the wisdom that you could actually got from this investor, the connection, the network, and the people that can point you to. These are all very important resources that the entrepreneur should have. Yeah.
So you mentioned earlier looking at the background, and you're kind of the second founder or second wave of founder. And then also looking at if a founder had angel investors or reached out to their friends and family. What are some other important things that you look at when you're considering investing in a company?
Generally, first thing first, I look at the team, in particular the founder who has the majority stake in the company. I look for founders who are PhD, basically not necessarily very poor, but enough to actually strive and hungry for they are hungry in their own way, very ambitious, and then also they are determined in their attitude and want to succeed in life and want to help people and want to take a whole group of people with them together to succeed together in a big way. So I look for people who have demonstrated this characteristic. At the same time, I look for people who have the track records. Track records not just in a lot of successes, in jobs, in school work. I also look for people who have experienced failure, can be very extreme and major failure, how they bounce back, how they actually stay resilient, how they make themselves better, how they actually try again in spite of the failure and eventually succeed again in their endeavors. So these are the few key things that I look for. Yeah.
And what, on the other hand, are some red flags that when you see you definitely do not want to invest?
Yeah, when I sense that the entrepreneur doesn't even have a passion and doesn't even have an idea where the company is going, as lack of vision, this is something that I definitely will avoid. People who are not able to appreciate help from investors or even friends, always serving in their own self-interest. These are the people also will be avoiding as well. And then the third type of person is who is not skillful in a core area and refuse to own up to their weaknesses, and refuse to bring talents or even people with the right strength to complement the team. In other words, a very stubborn entrepreneur. Well, a good entrepreneur, you have to be stubborn, but you sometimes have to be flexible as well. So it's really a balance between how flexible or how stubborn you are. But generally, the entrepreneur who are not willing to learn and not willing to move up their perspective in the world, in the business they are doing, generally are people that we try to avoid. Yeah.
Interesting. I'm curious to know your thoughts on if having a company founded by a single co-founder ever affects your decision, or if you tend to prefer at least 2 or 3 co-founders.
Well, there are really two sides of the coin for this. If you have a company that's founded by a single shareholders, of course, the biggest risk surround the mortality of the person. In fact, we pay a lot of attention to this. So we highlight the risk to the entrepreneur, and we actually want the entrepreneur to have a succession for himself. In the event that he's knocked down by a bus, who is the next guy who will be taking over the operation of the business and chart the direction. At the same time, what can be useful is that the entrepreneur could actually assemble a team of advisor and a team of directors who would challenge him, at the same time encourage him and point him to the right direction. I've also seen a company who come to me and we invest in company with multiple founders, like 4 founders, and then shortly after we invested into the company, one of the founders decided to quit and threatened to actually sell his intellectual property rights to the company. The good thing is that we actually have him to actually assign his intellectual property right to the company. And then, so these are some of the unfortunate things that may happen along the way, because we also understand that as an entrepreneur raising funds, running a business, sometimes when the company is really running dry of liquidity, it can get very, very stressful. And some of the entrepreneurs may not be able to handle this stress very well. So in the end, I mean, down to the conclusion, I always say that you need to really have a passion and really need to have the purpose to know why are you doing this business in the first place, right? Yeah, if you have the passion and the purpose, then it's not just about the money, but you're pursuing something that's greater than yourself, something that's greater for your whole team. And really the money part is really the end result, is a byproduct of your achievement and your determination to execute the business plan and make it happen. Yeah.
Very interesting. So I'm curious to know, are there any things you consider personally, not ones that you've mentioned, but something that, I don't know, if it's like gut feeling or something maybe like special cause that you believe in that makes you want to invest in a company?
Oh yeah, obviously many of the entrepreneurs, when you read books, right, you read about how to raise funds, listen to all the VCs and all that, you tend to believe that there's a lot of metrics that actually that the VC is looking at. And then there are some kind of like a black box that this venture capital will actually score you and your business plan, your team in a certain manner that those who receive the highest score will get funded, right? I can tell you that it's not so simple and direct. I wish it's so simple when there's algo deciding which investment. Ultimately, a business is consisting of a collection of people. And people have feelings, right? And that feelings largely is driven from a founder first. So the founder who founded a company has certain dreams and certain idea of what the business to do to serve people. And because of this value add that he brings out, then he receives capital, or rather revenue in exchange for that, right? And he start to build a team. Right, so for me, right, there are cases when I've invested ever in a company where it's purely just very much gut feel. The entrepreneur whom I met him twice. The first time was when he was trying to do a demo of his product, and halfway through the product demo, the demo actually fails, right? And he was so apologetic, and he tell us that it often fails because the product is not ready yet. And but he told us about his plans to actually raise the money to make sure that the product is good, and he actually tell us how he will actually guarantee the success of this company. So much so that he's even willing to sign a personal guarantee to us if we invest in his company. 18 months down the road, if he doesn't succeed in closing some of the sales that he has in the pipeline, he will personally take out his own capital and pay us back our capital plus the return. Wow. So he has so much confidence in himself that he's willing to do that for us. Then, that went on for just 1 or 2 hours after the demo, and I got kind of curious about what this guy is actually trying to do. He doesn't have a proper office, and then, but I like him as a person, the way he talks. And then I say, why don't we go for dinner? And then it was at the dinner where I spent from 7 o'clock to about 11 o'clock. At the end of dinner, I make a decision. But what happens during the dinner, right? You'll be interested to find out what they actually ask. It's nothing about the products. It's nothing about the financials. It's about the person's life, right? I asked him, I talked to him just like a friend would do to get to know the person better, about his family, where did he go school, who he makes friends with, and then how he sees money, how he treats his family, how he treats his friends, and why he wants his friends to be his co-founder, and why is he doing this business at the moment, and why is he raising fund and able to actually guarantee the return of the capital if it doesn't succeed. So at the end of the whole conversation, at 11 o'clock, I made up my mind. I told myself, just gut feeling, right, that this gentleman is worthy of my friendship, and I would want to be a friend with this person for a long time to come, right? And then at the dinner, I shake his hand. I say that, look, I really want you to be my friend. Then he said, Soon Liang, you don't have to invest to be my friend, right? Yeah, we can be friends. I said, no. I think if you agree to take me as a friend, and I think that you will be a very good friend of mine, then as a friend, I should help you, right? That's when I then write the check to him, and I'm actually the first angel investor that commit to the capital, to the amount, and then within 2 years, the company was being acquired by a Chinese company, and then we all of us basically sell our shares. Not that we want to sell, but he told us that he has an obligation to basically help us to monetize our investment, and we took back returns that's really beyond our imagination. So if I recollect back this particular case study, right, did I really understand the business deeply? No. Did I really understand the market he's working on? No. Do I know his team? No. How well do I know him? Only meet him for 2 times. And I committed. I think it's pure gut feeling. Yeah. It doesn't sound scientific, but I guess many years of this, my work as a consultant, as an advisor to small, medium-sized enterprise, and as an investor in established company, sort of allow me to actually see a certain pattern of traits of a very successful businessman and entrepreneur, and able to see who are the guys who are not successful and why are they not successful. So in my mind, there's probably a patterns recognition that able to size up some of the character and successful trait that the person has, to decide whether this is a person that's worth investing. Yeah,
that is true. I mean, a lot of it, you're investing in the business, but you're also investing in the person.
That's right. Yeah.
So the entrepreneurs who are listening should really take solace in the fact that sometimes demos don't go right. Sometimes your paycheck gets lost, or things happen. Yeah. And sometimes it really is you who, in the end, is being invested in. So you had to have faith in yourself.
Sure. I think the important takeaway is always be authentic, to be what you are. And at the same time, in Chinese, we have a saying, right? In Chinese is 想要先学做生意，就要学先做人. I translate in English is that if you want to learn how to run a business, then you need to know how to be a good person, right? How to be a good person, right? Actually, it's not easy. If you take a piece of paper and write down 2 columns, right, on the people that you admire and the people that you dislike, you write the whole column down, and you tell yourself and look at yourself in the mirror, right? If this whole list of people or these characters, do you have such weaknesses? Do you have such strength? And if you're able to pick it out and we really be transparent about it and try to over time reduce that weaknesses and increase that strength in the character that you admire most, you'll probably be a better person when you run the business, and when you treat people well. Nice people, good people will come to your life.
Very true. So quickly, I just wanted to touch, this is kind of a side note. You mentioned, this guy's demo failing. And I'm sure that you get lots of pitch decks and stuff all the time. Can you give advice on how long a demo should be? What makes a good demo? What makes a great pitch deck? What gets you interested and be like, oh, I want to meet this person?
Well, there's no fixed rule surrounding how long the demo is. I've seen entrepreneurs who basically do a quick demo, which I can understand what they're trying to explain to me, and able to tell me why is this technology or this invention that's important for the consumer. There are people who basically spend many hours explaining the features and of the demo, and explaining to me the technology behind it, which I couldn't understand what is the application to the real world, right? So I think it's important to really understand the segment of the customer that you're trying to serve, and what are you trying to address, right? I think that to me is very important.
Gotta understand the key message that you're actually trying to bring across. Awesome. So just a couple more questions. What are some companies or some industries that you're interested in investing in, or what kind of trends do you see right now within the investment community?
I think we see emergence of e-commerce business becoming very real. What I say become very real is 20 years ago, we don't even dare to actually buy air tickets, or we buy order food on the platform and giving our bank details, right? But today, with so much cybersecurity in place, so much of payment technology improvement, and also the credibility from the supplier, I think a lot more people are more willing and wants to actually pursue the convenience of buying things and ordering things online. So I think I will look at industry that involve around e-commerce, using e-commerce as a platform to either sell their products or services, or to facilitate a certain convenience. At the same time, also look at online marketplace that is able to permeate across the world, but able to serve a very dedicated niche community of buyer and seller.
Yeah, I think what we really see is a lot of community-based marketplaces being built. It is very now about much more niche rather than huge horizontal marketplaces. And then second to last question is, how important is it for a company to have an exit strategy in mind, even when they're creating their business?
Well, I think it is very important, because the moment you start raising funds from outsider and from institutional investor, you need to have in mind a possible exit strategy. Now, a lot of pitches that I've seen point me towards the same usual suspect that will acquire them. And in my mind, I was just thinking, right, why are you telling me this? That means you are not really disciplined in your research. Don't tell me all the unicorn companies have lack of good companies to acquire the business. Sometimes the potential acquirer may be a company that you don't even know. So instead of telling me who are the possible companies that will acquire, it is you're better served by actually planning your how you scale your business, and along the way, which are the strategic investors that will actually appreciate your product offerings and what you're trying to do. So if you are able to identify the strategic investors along the way that could actually fund you or even talk to, then you use your business or your business model to try to work with this strategic investor first, right? By having a business collaboration, it actually increases the chance of you being able to understand what is the pain point that they are facing, and if you're able to solve them so seamlessly, right? Definitely, they are a potential target to acquire you. Anyway, yeah.
Very good advice. So my last question for today is, what is one piece of advice that you'd like to give everyone that's listening?
Okay, thank to the listener who is watching this, right? I would say that if you are personally thinking of starting a business, even though you have a full-time job, it's all right to actually try on an online marketplace. You can do it in your free time. We talk about the 10% entrepreneur, and it's quite a common trend that people are actually doing gigs outside of their normal working hours or even weekends. But don't neglect your full-time job. And if you find that there's traction to it, well, just do it full-time, to basically hone your craft in running a business. And in today's context, right, today's economy, I think it's important for people to have experience in entrepreneurship. It is a very worthwhile experience to go through, I would say. Even though you fail, a failure is an experience by itself. And then, of course, if you succeed, not the first round, it's okay to keep trying, because not all businesses succeed in the first round even. Many successful business, you have seen them, the founder have probably failed once or even more than once during the period of time when they are trying to build the business. So it's important to know your passion, important to know your interest and your purpose. Why are you doing this business in the first place? What problem are you trying to solve, right? And also, I think I encourage everybody to actually start a business, right?
Awesome. You heard it from Soon Liang, start your business. Well, that's all that we have on Inspire today. Thank you so much for joining us. If anybody wanted to reach out and get into contact with you, either to, I don't know, throw some ideas around or get some advice, how can they reach you?
I think a worthwhile way to do it is contact Arcadier, because just a disclosure, I'm also one of the early stage seed investor in the company. So I think you should look for Arcadier staff first.
All right.
They help me to validate your business plan.
All right. Well, that's all that we have on Inspire today. Thank you, everyone, for tuning in. Until next time, be inspired. Bye.